a special guest, Rashmi Pensky, that she is at Citi Impact Fund, leading some of their impact investment work. So thank you for joining us today to say a little bit more about her experience. She's a graduate of Yale University, also a graduate of Johns Hopkins University, and has is going to share her journey through Citi. She's been there for over 8 years now, starting in a different group, but ending up focusing on impact investing through a circuitous path. But we're looking forward to hearing more of that journey. So thank you for joining us today, Ramsey.
Thanks,
Rashmi.
Sergio. It's really nice to be here.
If can you share a little bit with the audience a little bit more about Citi impact investing?
Sure. So, Citi, as you know, is a global bank. We are in several countries around the world, and our business is both consumer and corporate banking. But we since I've joined Citi, I've been working in our community development space, and so we have both philanthropic efforts to help communities around the world, as well as through our typical businesses. And the City Impact Fund was launched in January of this year to kind of provide an innovative way of helping communities, but in a way that was funding startups and helping to create jobs. And we are focused on four double bottom line sectors. So workforce development, sustainability, financial capability, and what we're calling physical and social infrastructure. So things like housing, transit, and healthcare. And then we recently added a new focus area as well, which I can talk a little bit about later. We're funding US based startups, although they could be working anywhere in the world. And we're making venture capital investments. So, primarily equity, convertible debt. And we are investing from the seed stage on up. And at the seed stage, we are only investing in women and minority founders. And it's basically our sort of recognition of the funding gap that exists for underrepresented founders. And we know that gap starts a lot earlier in an entrepreneur's life, but as a regulated bank, this is about as early as we can get in the game.
Got it. And how big are those investments usually in terms of check
Yeah, so
size?
at the seed level, our smallest check size is $250,000 up to $1 million. And then, typically our check size is probably like $2 to $5 million. And that's, ultimately we could go up to 10, but we want to reserve the right to invest later on. So usually we're not going to do the full 10 right away.
Got it. And I know we were speaking before the call, Rashmi, about you know about the journey into venture capital. But before we go into that, you're the first one that's on Rebel One Live that has worked in corporate venture capital. Could you share a little bit more with the audience on what is corporate venture capital and what you feel makes it unique?
Yeah, so as you'll learn really soon, I'm somewhat new to venture capital, honestly, but working in a corporation, especially a large bank like Citi, we have the advantages of obviously having a lot of other experts in the firm, and when we're talking to potential portfolio companies, we can offer them a lot of services once beyond this initial financing. But I would probably say the flip side of it is that we're not nimble. We have a lot of folks we have to check things out with and regulations to observe. And so typically in the past, Citi has a corporate venture arm called Citi Ventures. They've historically invested in areas that are strategic to the bank. So fintech, data, software. And, I'd say the impact fund is a bit new in our areas of focus. So it's been a lot more learning for all of us about how we're going to do that. Also, typically, I'm not sure that, we've invested so early, like at the seed stage. So this is another new area for the bank, and kind of thinking about, we're regulated, we have risks and controls. We've got to make sure we're observing all those rules, but also trying to be as founder friendly as we can.
Great. And how do you all? I mean, it must be amazing having it. Like you said, it comes with plus and minuses, right? Having a single LP that's a bank is nice that it's a single LP, but it's also highly regulated. So there's a lot that comes with that. How do you interface with City Ventures, and if so, how does that work?
Yeah, so the City Impact Fund is made up of three different teams within the bank. I sit in global public affairs on the Citi Impact Investing People's team. So we're the impact people. And then we are working with Citi Ventures, our corporate venture arm, as well as a group called Sprint, which is in our markets group. And, Citi Ventures, we're following their typical investment process and protocols since they have the most experience. Sprint is a group that is looking to invest equity in companies that will commercialize rapidly, that could eventually become lending clients for the bank. So we have also very different sort of priorities. And basically it's sort of one big pot of money, assuming we find a company that fits the different verticals I mentioned and sort of meets our standards of impact. Anyone can dip into that pot. And then we usually are all working across teams together.
That's amazing. $200 million impact fund is one of the largest impact funds to date. So which is exciting. Well, if you can share a little bit with the audience, how you move from beginning your career in more in consulting area to now being a venture capitalist focused on impact.
Sure. I'm probably the exception to the rule, I would guess, for venture capital in terms of a potential career path to get there. I've had several different kinds of jobs in different functional areas. I started out in investment banking as an analyst. So definitely learned the finance there. Then worked at two tech startups. Probably dating myself, but during the .com time, one went public, and then one got their Series A funding while I was there, and then ended up working, going back to grad school for international economics and relations. Ended up working in international economic development, looking at things like microfinance and helping small and medium-sized enterprises, but around the world. And then came to Citi and have been working predominantly in community development, focusing on the Community Reinvestment Act for I'd say about 6 to 7 years. And then about a year and a half ago, started working on planning this fund internally and then obviously launching it.
That's amazing. And in making that, I mean, what was that shift that in going from focus on like you said, the Community Reinvestment Act to shifting and focusing on the impact fund? What like inspired that for you?
Yeah, I mean, honestly, it was complete luck in terms of it actually happening. I've always wanted to do something like impact investing since the term probably first came out. And even before working in international development, you're trying to get money into places and to people who've been denied it for a long time, right? To kind of unleash their economic potential. So I think that sort of theme has been there in my career. To be quite honest, we were working internally sort of almost as consultants to different businesses within the bank. We sort of probably did a good job, I'm hoping, and then didn't have that much to do. And this sort of fell into our laps. It is an idea that the company's been thinking about doing an impact fund for several years. And it just seemed like the right time to do it. And we sort of thought about, we have a lot of experts already on impact in our Citi Foundation, as well as, like our Citi Ventures is our VC experts. So when we came up with the different themes, they were all sort of aligned with things that Citi has been trying to lead the way in other areas.
And we're sort of we're talking about it, not directly, but I want to talk a little bit about the notion that impact is philanthropy. And I know, as an emerging fund manager that's pitching to LPs, we are even counseled not to use the word impact because they think of impact as philanthropic, like you're giving it away. And the way, like for those listening that aren't familiar and thinking about double bottom line fund, you use the term that, there's like, I say there's three categories, right? There's impact, which is seen as philanthropic, concessionary in the middle, which is you're willing to concede impact for returns potentially if that exists. And then there's the the double bottom line, and you all call yourselves an impact fund, but it's double bottom line, which is finance first and impact. You need both. Where do you all do you lie more on the double bottom line, and can you share a little bit more about how you think about impact and how you measure impact?
Sure. So, we are a bank. We are actually finance first for, for several reasons, but one is, we really want to prove that this is possible, right? We do have a corporate foundation. They are making grants. They're kind of covering that philanthropic end of the spectrum. I think you've got a lot of other organizations and funds sort of in the middle concessionary space. We do have a little leeway, I would say, if we found a company that really had amazing impact and maybe wasn't going to be the best possible financial return, but still had a pretty good one, we might shave a couple points off that. But we really are looking for startups that are going to grow quickly. And the rationale for that, and I would say, microfinance was a similar industry. The more a company can scale and grow, the more people it's going to reach. And so we're kind of thinking of maximum impact and benefit in that way. And I think it is a wide enough spectrum that you have players at all the different sort of, lines of that spectrum as well.
Got it. So great. So it sounds like double bottom line, and some investments can be concessionary, but
yeah,
but not more double bottom line
yeah.
pure.
I mean, personally, I would say this is sort of an experiment for us, but our team wants an outsized return so that we can justify getting more funds to continue doing this eventually, hopefully globally one day when we can travel.
Awesome. No, that's powerful, especially well, in looking at and thinking about impact. It's clear how to look at investments from a quantifiable perspective. How are you all thinking about impact? And I know you have the categories, but how are you measuring that? And are you ranking and writing it? Are you using the Genie framework, or if you can share a little bit more about the methodology behind how Citi assesses impact.
Yeah, I'd say that, because we just really do have, one investor, which is the bank itself, we haven't had to really think out in advance an advanced impact methodology, right? We have, the company publishes an ESG report every year that kind of covers everything we do in terms of grants and business. And, there's certain common metrics that are going to pop out: jobs, revenues, number of beneficiaries, et cetera. So those are kind of like the broad impact lenses. I would say that also, because we're looking at various sectors and then companies at various stages, if you're looking at a seed stage company, it's kind of hard to talk about impact just yet. You can at least have KPIs and outcomes that you're measuring and planning to measure. But you may not see the impact for a while, in a tangible way. So we're a bit flexible at how we're thinking about it, but we have so many folks that have been working on philanthropy and social impact that we do have a pretty robust set of metrics internally that we would use, and we sort of pick and choose depending on the company and where they are.
That's great.
Yep.
And taking a step back, you talk about breaking into VC, if you will. Can you share a little bit more about your take for those looking at breaking into corporate venture capital? What would your advice be to some of those folks?
Yeah, I mean, I would say, this sort of fell into my lap, but I would say, at least somewhat ready for it, right? I've done banking, so I understand the financial part of it. In grad school, I'd taken classes on, I think there was actually an impact investing class, but it was just such an early time in the field. But we actually did look at, a potential insurance investment in Latin America. And so we thought about how do you look at a company where you don't really have a lot of information. And so, and then it's always been a personal interest. So I would say reading up on stuff. There's so many great blogs. There's your videos, lots of ways to learn about things before you actually get there. Venture capital just generally, and I think also the impact space, they're very still, I would say, small in terms of who works in the field. But I think networking is key. I think that usually folks working in the impact space are pretty friendly and want to get more people into the sector. So it's actually a little easier to network, I would say. And even in this time of COVID, I mean, I think before we networked in different ways, it can be a little bit easier sometimes to meet folks over Zoom, for a quick chat. Nobody has to go and commute anywhere to do it. So I think it's just kind of being persistent, but continuing to read. I definitely, in the last year or so, I've obviously had to learn a lot more about VC just generally. I found your posts very helpful in that, honestly, and sort of trying to figure out, okay, well, some of the subtleties or some things about term sheets that I may not know, and I don't have time to read the whole book, right? So I think with the internet and other things, there's so many other ways to learn. It's not that you just have to take a class or go to business school per se, although obviously that can be helpful.
Awesome. No, I definitely appreciate that, and thanks for the shout out. And for
Sure.
those looking for a boot camp, Rebel One does that,
Yep.
so check us out. But back to you, and no, that's great to hear. That insight, right? It's like even though you're leading impact at the Citi Impact Ventures, there's uh, there's not like one clear way to do it, right? And there's so many different ways to learn, and it's still an early field. Um, can you share a little bit more about what has changed since you all started? I know it hasn't been too long. You started in January, and originally your investment size was 150 million. Now it's 200. Can you talk about what's transpired since the origin of the fund?
Yeah. So, obviously, this summer was very tumultuous for the country. And with the death of George Floyd, Citi took, a bit of a public stance on where we stood on the issue. Our CFO published a blog, repeating, I can't breathe, and just talking about, how it affected him personally. But I think also the firm is really, and as with many firms, and I think many people, this was such an event that really touched the hearts of so many people and really made institutions start thinking about what's wrong in the country. So we got another $50 million to the Impact Fund in September, which was part of a broader initiative for racial equity, advancing racial equity that Citi announced, about $1 billion of different kinds of ways of supporting Black-owned businesses, of trying to help people become more, homeowners, and other types of initiatives. Which we as a bank, you look at structural racism in this country, and Citi actually recently published a research report, kind of trying to quantify the costs of that to the U.S. economy, and estimated that in the last 20 years, structural racism has cost the economy $16 trillion. When you think about jobs, when you think about homeownership, you think about education, and you think about lost or like missed investment in businesses and entrepreneurs. So, it's like as a bank, there are certain things that we could be doing better or we should be doing more of. And I think, so we got another $50 million from the original 150, where we already had committed to sort of funding women and minorities, right? Especially at the seed stage. But now we have another 50 million for Black entrepreneurs specifically, as part of this advancing racial equity initiative.
That's great. And as we, I mean, there's so much that has transpired, and especially to see the leadership in this way. I know like PayPal and JP Morgan have all stated pledges to invest in different ways as well. So excited to hear about cities moves to do that. If you're as you're thinking about like the future of Citi impact investing and where you all want it to go. I know you said it's early days. You're starting to make investments, but what's on the horizon? What do you envision for the group?
Yeah, I mean, I think we have some pretty ambitious goals. So obviously, we started this year, COVID hit, which sort of threw everyone for a loop. But we've, managed to fund, I think we've announced 5 investments so far. I believe that at least 2 of them are companies we met after COVID happened. So we met them remotely, right? We couldn't do site visits. We met them on Zoom. This actually was a big adjustment for a lot of people, right? You're used to doing all this in person. And then we've also formalized our seed investment program. So although in the beginning of the year we had announced it, at that time, I think our smallest investment we were envisioning was $1 million. Thinking about it more, in a more detailed way, and realizing that the needs of entrepreneurs, you may not need $1 million at that point. We were able to bring the check size down to $250 million. We have a somewhat more streamlined process for seed investments that hopefully don't require as much approval as some of the other later stages. But now we really, and I'd say we've closed 5 investments that we've announced. I think there's probably another 5 at least that we're going to close, but we have some pretty ambitious goals for next year. Like I think we want to fund 10 to 15 seed investments and potentially another 10 to 15 other investments. We have just like grown the team, we're getting a couple more folks. But and you've looked at deals as well, several deals. The number of deals you're looking at before you actually find one that fits, it's a lot of work. And and I think also, particularly, I've been trying to lead our efforts to fund underrepresented founders, right? So it's a lot more outreach, is talking to folks like you and your audience. So we still have to keep doing that too. And I think hopefully we're getting some traction. I can't announce who it is yet, but hopefully by the end of this week, we will actually have closed an investment in our first African American founder, who's a woman. So I'm very excited about that and looking forward to kind of seeing more entrepreneurs come in through the pipeline. I will say, this year, when we started this in the beginning of the year, and I think it still continues in some circles, this idea that there isn't a pipeline of entrepreneurs that are talented and that are underrepresented, and we have found that is absolutely not true. Even though we'll certainly make efforts to talk to folks in the communities they're in, but at the same time we're tracking the entrepreneurs we talk to, and we've met so many talented entrepreneurs. It's really more an issue of our capacity to try to help them get funding at this point.
Absolutely. In in your opinion, in terms of what systemic things we need to do, I know you're doing great work at Citi and making some of those strides there. It's great to see a fund that's really thinking about how to think about impact in all different ways, right? Not just the diversity of founder and equitable community, but also by topic and focus area that you focus on. What is taking a step away from Citi and just thinking more broadly, what are things you feel just need to change systemically? That like what are things that we can do to really move the needle for women and more founders of color?
Yeah, I mean, some of it is just like rethinking how we do things already and why we do them. So, it is sort of like, we all know the statistics. Like, if you have a Harvard degree or a Stanford degree, you're so much more likely to get funding than someone else. And that's just such an arbitrary thing, right? So really, like, when we're talking to founders, we're really trying to just assess their potential, but based more on like, what can they do, or what experience do they already have? What kind of teams and contacts are they able to pull together towards accomplishing their goals? And honestly, does that really matter where you went to school? Probably not, right? Like, if you're bright and motivated, you're gonna achieve your goal no matter what. So just I think that the ways that people have traditionally funded people and the criteria they've used to judge them, really asking, like, does that even make any sense? Is that correlated to anything particular, or is that just like, hey, yeah, I went to an Ivy League school and I'm only familiar, like, more comfortable with folks who went to one, or some arbitrary thing. So a lot of that is just rethinking processes. And then obviously, I know implicit bias training right now is kind of all the rage, but it is actually something really that is helpful for people to understand that what they see as sort of normal and as what is conventional is not necessarily that way for any good reason. I think also, and this is where, especially as I'm looking more at earlier stage companies, really appreciating the role of accelerators, earlier stage investors like yourself, who are actually doing a lot of the work and sort of driving that pipeline to someone like me, in the amount of education and sort of guidance you're giving these entrepreneurs. I think there are a lot of times, like, I'm talking to entrepreneurs and I'm like, I'm not even sure, like, this sounds like an amazing business. I'm not even sure though that venture capital makes sense for you. Like, have you thought about other kinds of financing? And when you think about it, VC is still such a small part, right, of when you look at overall what most entrepreneurs need. And seeing the rise of sort of other funders who are thinking about revenue-based financing or other types of collab capitals, pioneering some really interesting ways of funding entrepreneurs. That's, like, I think also partly going to help address sort of the gap in funding that we've seen. I think that a lot of times, like, particularly if you're maybe more underrepresented, you're starting a business doesn't mean you actually want to give up your ownership of it, right? It's also understanding, like, why did you start the business? Maybe you want to, like, pass it on to your kids. Maybe you don't need to grow quite as quickly as a VC funded company. And I think there's a lot of support institutionally, but I think also just thinking about I'm working with a group called Black Women Talk Tech right now. They're going to have an event on the 17th called The Face of a Founder. They just did research on Black women tech entrepreneurs who want to build billion-dollar companies. And they call this report The Face of a Founder. And really it's just changing what most people think of when they think of who a founder is. I think we all just really need to adjust our expectations there.
I love that. In talking about, there's several layers there, right?
Yeah.
You're talking about, that how do we increase access for founders themselves, and then how do we lay the groundwork for providing different types of capital and actually innovation in venture capital, and that's
Yeah.
not and where there actually may be greater returns. So that's a whole different
Yeah.
subject as well. You mentioned before that you all do venture debt as well. Is that correct?
We don't do venture debt. I mean, we'll do convertible debt, but we don't do,
Got it.
yeah,
Okay.
we don't do venture.
Have you all considered different models in the same way that Collab Capital does? I'm curious.
We talked about it. Honestly, this is where I think being a regulated institution comes into play. So we can't sort of really deviate too much from certain scripts at this point. We're always thinking about it. Another thing that I should probably clarify is we don't invest in other funds, partly because of regulation. Although, if you think about it, when we were thinking about what would have the most impact on underrepresented communities, I think one of the best ways is to invest in funds managed and run by people of color, by women who are going to probably more likely fund entrepreneurs who are similar. But as of yet, we've not figured out how we're going to be able to do that. I think if we could, we'd certainly be interested.
Awesome.
Yeah.
So, Rashmi, we appreciate your time. Any, as those think about for all the impact founders in the audience, can you share a little bit about them? How do they reach out to you?
Sure. We have a general email, but you can also just find me on LinkedIn, or my email is rashmi.pendse@citi.com. And so, I may take a while to get back to you. I get a lot of emails, but I'm always happy to kind of start chatting with you, even informally, to sort of look over your pitch deck and kind of give you some pointers. A lot of times I will say, I'm meeting people and it is just too early for us, but I may know other investors who might invest earlier than we do. And I think it's always helpful to kind of start a relationship with folks, so that when you guys do get to the point where we could invest in you, I've already known you and I kind of know that you're able to deliver on what you've sort of said all along. I think that's very helpful. This is still very much a person to person kind of, relationship based business. And so I think it's really more about expanding sort of like the people in the circle. So, appreciate folks reaching out if they're interested.
Awesome. And thank you very much. This was Rashmi Pendse, who is a VC at Citi Impact Fund for those watching. And this was Rebel One Live for this week. And if you're interested in reaching out to Citi Impact Fund, you can also follow the link in the live stream notes. So thanks again for joining us, Rashmi, and sharing some of your wisdom.
Thanks, Sergio.